Welcome back, focused learners, to another deep dive. Today, we are exploring the 2026 landscape of artificial intelligence in wealth management. We're going to break down what we're calling the Copilot framework. It's a strategy derived directly from our latest sources to help you navigate this rapidly shifting financial world. We've got a ton of fascinating data to cover, so let's jump right in.
Okay, let's dive into this, because it's literally the multi-million-dollar question on everyone's mind right now. Can glowing, algorithmic perfection truly replace human financial wisdom? I mean, we've all seen the headlines, right? Chatbots building portfolios in seconds. But is an algorithm actually capable of taking the wheel when it comes to your life savings, or navigating the really heavy emotional complexities of aging and legacy planning?
To figure that out, here is our roadmap for today's explainer. First, we'll look at the AI finance revolution. Then, information versus human wisdom. Third, AI data privacy guardrails. Fourth, verifying AI financial advice. And finally, the ultimate hybrid strategy.
All right, kicking things off with Section 1, the AI finance revolution. AI's rapid expansion in finance.
Just get a load of the staggering figure, a 400% increase in the user base of the AI trading platform Composer in just one single year. Retail investors are rapidly adopting AI for quantitative trading algorithms. But it's not just active trading anymore. AI has completely evolved from basic chatbots into deeply embedded tools that dynamically automate your budgeting, detect hidden fee leaks, and perfectly tailor everyday robo-portfolios with unprecedented speed. What used to require an advanced mathematics degree and a highly paid quant fund, that's now accessible to the everyday investor right from their smartphone. The old barriers to entry have been completely obliterated.
Now, what's really interesting here is that despite this massive, rapid tech adoption, the data reveals a completely different story when it comes to actual life planning. According to a 2025 Northwestern Mutual study, a solid majority of everyday investors still heavily prefer human trust for their major decisions. We're talking 56% wanting a human for retirement planning, and 55% preferring a human to answer complex financial questions. Even for something as basic as managing a budget, humans still edge out AI at 48%. So people love the tech? Sure, but they clearly still crave that human touch.
Moving right along to Section 2, Information versus Human Wisdom. Why money decisions aren't just math.
Think of it like this. On one side, we have AI strengths, real-time rebalancing, rapid optimization, and automated workflows. It is a lightning-fast calculator that literally never sleeps. But on the other side, human advisors provide behavioral coaching and deep empathy for major life transitions. An AI can run the numbers all day long, but a human coach helps a family navigate the really messy emotional realities and the staggering projected costs of in-home care for aging parents. AI serves as the calculator, absolutely, but the human acts as the craftsman, guiding the ship through the emotional transitions that numbers alone just cannot capture.
And an academic study published in NDPI perfectly highlights this exact divide. Generative AI succeeds beautifully as a starting point. It's great at generating generic budgets and answering explicit questions, but its weaknesses are pretty glaring. It lacks a holistic view. It frequently misses nuances like Medicare coverage misconceptions or the staggering cost of home health care versus what insurance actually covers. And crucially, it literally made calculation errors in basic retirement math. It doesn't think outside the box, and it definitely doesn't know how to prioritize its own recommendations.
Which brings us to this incredibly powerful quote from one of our sources. It can calculate, but it cannot consecrate. An AI might be able to perfectly model a Roth conversion or suggest exactly how to minimize portfolio drawdown, but it cannot shoulder the emotional weight of your mortality, your family legacy, or the sheer visceral panic you might feel during a massive market crash.
That brings us to Section 3, AI data privacy guardrails protecting your sensitive information.
Okay, so if you're going to use AI to audit your recurring expenses or test out automated financial nudges, you need to follow this strict, absolutely non-negotiable checklist. Step 1, anonymize your identity. Step 2, always use hypothetical figures for testing concepts and strategies. And step 3, never ever share your actual account numbers or upload raw financial statements. You can learn the core concepts perfectly well using rounded, anonymized data without compromising your private information.
And the reason I am being so incredibly strict about this is the massive risk of exposure.
Unprotected personal financial details uploaded to free AI platforms could easily be exposed to hackers or sucked up and used by third parties to train future models. The hypothetical framework we just covered, it's essential for your digital safety. It is a must.
Let's move into Section 4, Verifying AI Financial Advice, distinguishing popular advice from personalized truth. To really understand why verifying advice is necessary, you need to understand the academic concept of model collapse. This happens when AI models recursively train on the same data, including data generated by other AI models. It leads to what experts call a financial monoculture. Basically, the AI starts making predictions based on popular repetition, rather than actual verifiable truth. Just because an AI sounds completely certain doesn't mean it's right. It just knows what gets repeated most often on the internet, which, let's be honest, isn't exactly a flawless beacon of unvarnished truth.
So how do you actually protect yourself? You use this verification checklist whenever an AI suggests a new financial strategy. 1. Cross-check the suggestion against your own personal long-term goals. 2. Verify any tax or legal implications with reliable professional sources, because remember, AI is notoriously bad at catching complex tax nuances. And 3. Look for missing holistic priorities. Ask yourself, what is this algorithm completely failing to consider about my family dynamics, my specific aging plan, or my personal emotional risk tolerance?
And finally, Section 5, the ultimate hybrid strategy. AI as a tool, humans as the craftsmen.
Let's see how all this builds into one of the most practical, high-value ways you can use AI right now, as a research assistant rather than a primary decision maker. You can prompt an AI to generate an agenda template for you with questions like, what are my tax blind spots this year? Or what are the specific trade-offs of paying down this debt versus investing right now? You let the AI generate those big, structural questions, and then you bring that right to your human advisor to maximize the efficiency and the depth of your meeting. It's a game changer.
And this strategy aligns perfectly with the current industry consensus. Millionaire investors and top-tier advisors aren't running from AI. They are embracing it to boost their confidence and clarity. As one industry expert brilliantly noted, AI won't eliminate jobs. It will allow us to do more with fewer people and serve better. By utilizing AI for data crunching, meeting summaries, and routine workflows, human advisors are freed up to spend way more time on what actually matters, building confidence, providing clarity, and scaling those irreplaceable personal relationships with clients.
So the absolutely crucial point here is this. We shouldn't view this as some sci-fi battle between man and machine. It's about using the machine to empower the man. Which leaves us with this final thought for you to ponder. If AI is in the background perfectly optimizing all the math, who is protecting your ultimate financial purpose? Keep AI safely in the co-pilot seat, for sure, but make absolutely certain your human values are always the ones flying the plane. Thanks for joining me on this explainer. Keep learning, and I'll catch you next time.